Hi, everybody. I'm Dale Pinkert. How are you trading warrior lions doing today? Let's have a great week. I got a haircut this weekend. So equities are coming in sharply lower after the real negative action on Friday. Looks like it's breaking down out of a flag. Just trader gut. I think there's a possibility that we turn it into Yellen this week. Dixie inside day. So still my view that there's still another push higher in the euro and another push lower in the pound. Thinking tomorrow is a possibility for that to happen, maybe up around 98. As long as we're under 98.5, I have to give this the benefit of the doubt. This may have completed something, but as you can see, it looked like we completed here after a couple of days. We had a bounce, and then we had one more push down. Perhaps that's going to repeat itself, that we have this bounce and we have one more push down to 95.5 or so. Who's in the house today? I have a couple of interviews. Brian Twomey is going to be with us because he was knocked off the air with technical difficulties. Hi, Alien. Hi, Jax. Hi, Khalid. Hi, Fame. Izzy, George, Tomas. Welcome to LAR. Everyone, welcome, Tomas. PA. Welcome, Tomas. Welcome. So I know a lot of people think maybe that was it for the dollar. It could have been. Iran. Welcome, DV34. Welcome to LAR. Also, I wanted to show you Euro Aussie. It got up to the fib retrace we talked about, but before I get there, the euro looks corrective to me. I still think we're going to make one more move up towards the daily back test of the breakdown line, which is coming in above 113, before we have a better shorting opportunity in the euro. And the Euro Aussie got up to a zone that I talked about. Ricardo, I believe, also talked about it. We've already tested the 61.8 level here. When I had this line drawn last week when we were in here, headed up to it. Maybe we get one more push up, but the 61.8 level is showing some resistance here. Ryan should be in here in about 10-15 minutes. 10 minutes, I would say. BW. Hello, Roland. How are you, Zurich? MRC, how are you doing? So those are my thoughts for right now. So we're setting up this Euro Aussie short. This may have been it, but the RSI reading was confirmed. I'd like to see one more push up in Euro Aussie, 58.30-ish in the next few days, and I'm going to be probing. I'm going to be taking shorts up there. Yeah, I saw your tweet. We could probably wait to buy oil until Canada retraces up to 42. So Canada was saying there was going to be another break in the crude oil market with this turn here. And when I look at it on a daily level, 61.8 is coming in at 42.70. So that's where I'll be looking at a potential buy in crude. Capiche, Alien? Hi, Pipper. How are you? How's everyone doing? Everyone doing okay? How about some ideas? You guys could tell I got a haircut this weekend. So you want a new car? You gotta hang out with us in Lar. You rent but want to buy a house? Hang out with us before you click your mouse. And you want to be a star? You gotta show your charts in Lar. Give me an L A R. Lar, rar, 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 rar. Lar. Lar theme song. Hi, Fab. How are you? Everyone doing okay? Giuseppe Bazil called the bottom in Canada. There were also some Jacks got long Canada Friday. I think Goldie got long Canada Friday. So some nice calls in Canada from last week. Hi, Goldie. How are you, buddy? What are you thinking? What's everyone thinking today? Nice shot, Goldie. Giuseppe's looking for 158. I'm thinking 142 to 44, and then one more wave down to 130. Yeah, I'm thinking up here, and then one more wave down to 130, then the big move. Because I still think there's a bear market rally coming in crude. Still think we get 38 to 40. And CAD's not going to prosper in that environment. CAD will, but not USD CAD. That's just my extremely accurate and humble opinion. But thoughts for the week are buying this pullback in Euro USD. I think there's another push up. Not as sure about the pound, but I still think we're going to get a new high. Called out this short prior to the NFP here in Euro. To me, it looks like it's just correcting. 110.50 would be a good entry for me. 10.50 to 9.80. I think we hold it at least once. What do you got, Sarah? Adinda, are you facilitating today? Thank you, Sarah. Yeah, that's my that's the same line I have above 113. That's the back test line. Great minds, huh? Kindred spirits, Eric. That's what I'm looking for. then maybe a big short up there. Okay. Looking at 152 for the pound. Is that it, Goldie? Did you send Brian the link? Brian Twomey? Because I invited him back because we weren't able to complete his interview last Thursday. So waiting on Brian now. Happy monkey year to you too, Ricky. Yes, we're doing it now. That's what I tried to say before we after you. Yeah, so if you could go ahead and send him the link, please. How are you, Rick? So the year of the monkey, what does that mean? Monkey see, monkey do. Stop monkeying around. Hey, hey, we're the monkeys. Hey, hey, we're the monkeys. We just keep moving around. We're so busy playing. Da, 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 da. Hey, hey, we're the monkeys. Da, 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 da. Remember that show? Yeah. Hi, Ali. Hey, hey, we're the monkey. We just keep moving around. So I didn't win Best Speaker for the awards. Wayne McDonald won. Okay. Daydream Believer, right. Ron remembers. Daydream Believer. Hi, Sinatra. The Year of the Monkeys. Michael Nesmith. Mickey. I think Brian's in the house.
I'm here. Good morning.
All right, Brian, how are you, man? I hope you had a good weekend.
Yeah, yeah.
You know, we had that another bearish event with Peyton Manning, who I was pulling for to win the Super Bowl. So we have the January barometer, which is negative stocks. We have the Super Bowl indicator that's negative stocks. We have North Korea sending up a ballistic missile. A few weeks before they said they have the hydrogen bomb. Makes me want to buy the S&Ps with both hands. So why don't we just pick it up? You have the floor, buddy. I've read the few pieces you put out. The major change I see from you in your recent writings is you don't sound as bearish gold anymore.
Correct. Okay. What's happening is the current central bank models are in a major revolutionary restructure. What's the restructure? You know, I didn't know this, but The restructure began in early 2014. This is when the central bank studied Silvio Gozell. He was the person that wrote about negative interest rates. Are you ready for this? In a famous paper in 1891 called The Reformation of Coinage as a Bridge to the Social State. I read the paper. I also read the 1906 book, The Natural Economic Order. This is what the central banks are doing now is they're all moving to negative interest rates.
Remember when we had a beer? I think it was November 1906, you and me?
Yeah.
Oh, we got together for happy hour right before the Knickerbocker crash.
You know, I looked up the Knickerbocker crash. I know I'm skipping around, but that was the United Copper Company. Something happened. They went bust, and then the bank was the Knickerbocker Bank in New York. Who knows? I mean, I didn't look at it real deep, but you know, those were the days of the greatest stock manipulations that there ever was. We didn't have broker call loan rates. I don't know if we had PE ratios then, you know. So what's happening?
Okay, so we're in this restructuring. Is the restructuring, besides the rate structure and going to negative rates, have anything to do with revaluing the dollar?
Yes, it does. As a matter of fact, all your currencies are being revalued right now. I didn't know this until just recently, that all the central banks since early 2014 have been studying this negative interest rate deal. And you know, it's Europe. They're always the first. They adopted negative interest rates. Now they're all doing it. What does it mean?
You think the U.S. moves towards it eventually, Brian?
No, I don't. Not yet, anyway.
Okay.
No. I think that they stay where they are. The problem is that if we still see there's 6 central banks right now that are negative. You want to watch Bulgaria? They're at 0. You want to watch Israel? They're on the verge. And you want to watch the Czechs, the Corona. They're on the way. Will it affect the dollar? Not yet. Not yet, anyway. And why not yet? It depends. If the only game in town is going to be to earn yield in United States Treasuries, money is gonna. You heard Mark Chandler the other day. $5.2 trillion a day float around that money needs to earn interest. It needs to earn yield somewhere. If the only game in town is the United States, then that's where it's coming. It's coming into United States, United States yields, stock markets, and everything else that the United States offers. And then
okay, let me just push back on that, because sometimes, look, there are higher yielding currencies because they're in a currency crisis, like the ruble. You could have gotten huge yields on the ruble, but doesn't it get to the point where you might get a higher yield, but if the underlying instrument is falling in value, it wipes out all the yield, and you'd almost be better off in a stable currency.
There you go.
Not paying you yield, but not cratering.
Yes. The safe havens. You want the safe havens. The United States dollar is going to be the only game in town.
Okay.
You know, the funny thing is, I went back and I looked at Martin Armstrong yesterday, last night, sometime. He thinks that we're going to negative interest rates. I don't know. But he also sees that same crisis that I saw, that I pointed out in the 4th quadrant. He thinks it's coming from 1917 to 2020. So I'm dead on track there. I got off track. What was the question? Let's go back.
Okay, well, you know, you're talking about that. You mentioned a few central banks to pay attention to that are close to moving to negative rates, and you mentioned Israel, the Czechs, and Bulgaria.
Yes, they're next. They're next to fall. What is negative interest? How about, let's take the next step. What does negative interest rates mean? The first phase is negative, obviously. The second phase is, what's the purpose of going negative? You want to stop the rate of growth of interest. The only way that you can stop the rate of growth of interest, or at least slow it down, is to go negative. I mean, essentially, what's the difference between negative and positive interest? Positive interest allows you to go to infinity. Negative interest, there's a bottom. Okay? 0 is your bottom. Minus 100. Negative 100, that's your bottom. So the third, there's, in my opinion, there's a third phase here. And it was revealed the other day by, it was either Draghi mentioned it, or it was, you see Jean-Claude Trichet is coming back. One of those two mentioned it. They said, I think we're going to have to look at the exchange rate. That's phase 3. That's phase 3. Look at the exchange rate. How are you going to look at the exchange rate in this negative interest rate combination? First, what you're going to do is you're going to change the entire structure of how we are looking at our currency prices since Euro introduction. Traditionally, we followed the 8:30 in the morning fix. That's, as of July 1st, that's gone. We're going, as of July 1st, to a 10 o'clock fix of the euro and all your currencies. Well, what happens at 10 o'clock? Let's ask this question. What's so special about 10 o'clock? 10:30 is the gold fix. And right in that area, I believe 11 o'clock is the silver fix. We seem to be moving toward this gold-silver fix. What are you doing by doing this? Again, you are trying to control the exchange rate and hold it in smaller ranges. Not only has the euro, the euro began with 15 categories of interest rates. Then they cut it down to 7. Now, beginning July 1st, they're cutting it down to 5. 5 categories, that's it. What are they doing? They're holding the interest rates into smaller ranges. They're changing the methodologies of their calculations. The methodologies within those 5 ranges will be held to transaction volume. So volume is going to run interest rates. Volume is going to run the exchange rates. All the central banks are doing this. They're doing this since the beginning of 2014, and everything. It's all coming to light here. Okay. And then here's the other thing. Here's the most interesting aspect of this whole phenomenon. If you look at the methodology of all these central banks on how they calculate and they factor their interest rates and how they release their interest rates, and then look at the methodologies in how they calculate and release their exchange rates. Dale, the two are night and day. The two calculations are miles and miles apart. I said to myself, how could you guys do this? Was this, unless this was the method? But see, now that they're all shifting to smaller categories and they're going to hold these interest rates into smaller ranges, now what they're doing is they're calculating interest rates and exchange rates exactly the same. And they're going to hold it all inside those small channels. And again, knowingly, willingly, purposely. If you remember last year, one of these things that we did, I mentioned that if you go back to the the Central Bank of England 2010 quarterly bulletin in the summer, you will see the statements where they say we are going to hold the exchange rates and stop volatility knowingly, willingly, and purposely, blah, blah, blah. That has been the deal all along. The BOA figured it out long ago. That's why you don't see much movement in the British pound. You know, Euro is the way to go. Euro is the only way to go, and the only reason why it's the only way to go is because it is a complete opposite to the United States dollar. They're allowing the euro to move. They're allowing it still to be the total complete opposite to the United States dollar, whereas the British pound is very different. It's had a love affair to save themselves from World War I to the United States by hooking to the United States gold price when it was priced at 2067. Okay, the world works like this, and then I'll get back to some of this methodology. This is fascinating. I'm sure you can see the euro on top or bottom. It doesn't matter. There are two currencies in this world: the euro and the United States dollar, the Dixie, the DXY. That's it. That's it. Everything else is in between. What's in between? All your currencies, commodities, everything is all in between. That's why the euro is allowed to move. That's why the United States dollar moves and hangs out with the euro. But that's why those currencies stuck in between don't move.
Well, the yen has been moving lately, Brian. I mean, there's been increased volatility in the U.S. dollar yen that I haven't seen for some time.
Yes, you're right. And when I say don't move, you know what I mean. Let me quantify don't move. Your better volatility is seen in the euro USD and in the United States dollar. Your best volatility. Okay, let me say that so I don't, yes, the yen has had good volatility as well. And this is why I've been saying I like the euro so much better to trade than the British pound, because the euro has much more volatility than the British pound. So,
okay, let me ask you this: the changing of the fixed time closer to the gold fix and silver fix, is it kind of a dress rehearsal to begin to tie the euro to the precious metal market? Would the euro possibly end up being precious metal backed? Because most people thought in a new currency regime it would be something like the yuan gold backed or an SDR. So is the euro vying for some type of precious metal backed currency?
I think the way to determine that is right now I'm saying yes, but I cannot say yes absolutely based on fact, but I can say this: we are moving to the gold silver standard. Okay, do we get there? Does it actually happen? I don't know. I mean, how do you get to a gold? Let's think about a gold standard. What exactly is a gold? Where do they derive the prices from a gold standard? 2067 United States and Roosevelt's 35. Where did they get this? I mean, what did they pull this stuff out of a hat? No. What they did was they took all the various nations' interest rates and somehow I don't know if they calculated the nation's interest rates. How did they get a gold price out of it? I don't. And the gold fix, I don't know. Did they come up with some kind of a simple average, a median? Did they factor some kind of a calculus equation? I don't know. But that's where a gold standard comes in, and it comes in based on an interest rate. So are we moving to the gold standard? It's possible, yes. It's very possible. Let's go back and think about negative interest rates for a second. And then go back to the gold standard. What could they possibly be doing with the negative interest rate is, if they're going to follow the complete methodologies of Silvio Gozell, who invented these negative interest rates, then that means that they have to change the methodology in which they calculate negative interest rates. In other words, the way we work right now is interest rates are determined based on the money supply. We spoke about this the other day. You know, money's when they buy the bonds, interest rates go to nothing, right? This we know, and that's been the way it has. That's the way it's been. What changes, if they follow these methodologies closely, is the interest rate will no longer be associated. It will not move up and down with the money supply. It will move up and down with a price. A price of a nation. What's the price of a nation?
Oh, so you're talking about revaluing currencies based upon maybe a formula of GDP minus debt?
Yes. Yes.
I've heard that's going to be the revaluing. How they're going. That's going to be the.
I think it's going to be. You have to factor inflation in there. And if you go to Silvio Gozell, and this makes a lot of sense, okay? The only way that you can keep a price channel and keep your system inside this price channel is the prices must remain inside money velocities. That's what will be driving the system. Higher velocities, prices up, interest rates up. Lower velocities, interest rates down, prices down.
Okay. Well, the U.S. Despite all its printing, has had very low money velocity, hasn't it?
Right now, it is at 5.9, I think. I wrote it the other day. I can't exactly remember. It is at the lowest right now than it has been in, I don't know, a couple of years. It's in a range. It's in a range from 6 to 10. I believe that's 6.0, 10.0, the way that's factored. The euro is also in a range. You look at what you want to look at to determine what's real. You have to look at M1s. You got to look at your M1s, your M1 money supplies. They are in the range as well. They're in a very small range. They're holding these systems tight. Are they holding these systems tight because of they're connecting negative interest rates to actual prices? And what does prices mean? Well, we look at prices as inflation. Silvio Gozell looked at prices as hook those prices to commodities. Those are your drivers. Commodities, products, whatever, it doesn't have to be apples. I mean, a tractor is just as important as an apple in society, you know?
Yes.
I hope I'm making sense here, and I hope I put this thing together. There's a lot to this. There really is a lot to this. And the question is, are the central banks going to do this? Are they going to succeed? Are they going to follow Silvio Gozell to the T? I'm at a loss for words. Yes, I got an argument for yes, I got an argument for no, but since we're only adopting these negative interest rates recently, so I need a little bit more time to know exactly, are you leading us down to the gold standard? Do these prices that I think you may follow, does that lead us directly to the gold price and the gold standard, and then revalue all our currencies to gold? Is there going to be some kind of a volatility in there that's going to allow us, to become traders? I have more questions than I have answers so far. It's a fascinating system. I want to say on one hand, it's brilliant, it will work, but then you're also dealing with the central bankers. So I
So
don't
with
know.
this
But
with this transition going on, does it make it hard for you to have more difficult for you to have actionable ideas in the market?
yes, as a matter of fact, it does because because the ECB they're eliminating the 2-week interest rate, they're eliminating the 2-month interest rate, and they're eliminating the 9-month interest rate.
So
Man, when
they're taking away from analysts like you barometers that you use to gauge where price could go to.
exactly. If you look at, I mentioned the other day, if you look at all those trades that are on my blog site, I mentioned 300. I don't know. Well, yeah, I followed them up and down. They were all based on my interest rate models. Okay, and they're perfect. They're perfect. But they're taking away. They're taking away categories. They're shrinking the categories down to nothing, and they're holding the ranges down to nothing. So what I see so far, and again, you can read this. I wrote all of this stuff. What I see is, let me give you an idea. Today's euro, okay? Today's euro. I figured and factored everything. Today's euro's range is 60 pip range. If you cut the interest rates down, you're down to an 8 pip range. What I
So
think,
they want to compress volatility.
thank you. Buy, if my figuring and factoring is correct, they're going to compress your prices by 1/3.
Wow. So
1/3.
they're killing our game.
Thank
The
you.
central banks are trying to kill. They're trying to kill the trader, take the trader out of it.
That's exactly what I'm saying. And if you go back, and you look at, I went back and looked. What I have is I have Australia's prices, daily prices, going back to 1919. I went back and looked at the various periods, the 20s, 30s. I looked at all the various decades, the gold standards, Bretton Woods, everything. I'm going to tell you, Dale, if they succeed in this, they're going to kill us. If you look at
all right,
Britain,
well, we got a comment in the room. If the gold standard comes back, it will finish the Forex market.
it could very well be. It could very well be. The gold standards did previously. Gold standards killed us. Bretton Woods. What was so special about Bretton Woods is that they instituted a fluctuate. It wasn't exactly hooked to gold, Bretton Woods. It was connected to a fluctuation band, 1%. They did 1% above, 1% below, and that was it. And if you went above or below, these central banks would come in with their money and bring the price back to some kind of equilibrium center, an acceptable level. Ask yourself this question, and this was, and I encourage everybody to go and read the Natural Economic Order by Silvio Gozell. You can get it online. Put your thinking caps on with this guy, okay? It is fascinating. You got to do a lot of reading. What is the difference in, if the euro today is 108, it trades at 108, but tomorrow the euro trades at 115, 1.15, let's say. What's the difference? Where should the euro be? What is the value of a euro and our currency prices? Where are the central banks happy with their currency prices? They don't.
Well, I mean, the euro's been in the 10-cent range for 8 months now.
Yes. Are they happy with these ranges? When you talk about the question of value, what is value? Value is, I don't know, intrinsic value, constant value, phantom value. There's a whole kinds of things of value, but Value is one thing. Price is something else. What I think they're trying to do with the exchange rate is not only connect it to those more closer to these interest rates, but they're trying to somehow connect your currency prices to the actual prices of a nation, inflation. Or if, Silvio Gazelle recommends that they connect their prices directly to commodities. I gave a number of examples. If anybody wants to read that, that article's floating out there somewhere, but it's on my blog. It's really, really fascinating what they're trying to do.
Well, don't you think, Brian, right now, the dollar is viewed as, the soundest currency. Armstrong's, a lot of super bears are still looking for a sharply higher dollar, and that for central banks to make a change until they knock the king off the throne and there's some type of dollar crisis, that it would take something like that before they came up with something different?
Yes, remember something. We're in the fourth quadrant. Oh, don't ever forget, man. Don't ever forget fourth quadrant. And don't ever forget that if you go back and you look at what happened in fourth quadrants, here's the 1920. Look at this. What happened here? World War I and then creation of the Fed. What happened in the 1960s? Gold wars. If fourth quadrant are, I like to quote Joseph Schumpeter when I mention fourth quadrants. Here is the quadrant of creative destruction. Ask yourself this question. I outlined 200 years of markets. All crashes occur in the second quadrant. But what does the world do in the second quadrant after the market crashes? Nothing. Zero. Why don't they fix the changes in the second quadrant? Nope. They wait until time goes on, until the fourth quadrant hits, and then here's where they get creative. There has been so many creative strategies in the fourth quadrant in the last 200 years. Every single one of them failed. They failed. They don't correct when the markets crash in the second quadrant and fix the changes so they can move on. No. They leave it alone. They move on, and life is a grand old place until the fourth quadrant hits, and then they realize, hey, we got problems. We better fix this or we're in trouble. So they implement some kind of a creative strategy. And that's basically what they're all doing now with negative interest rates. It's a creative strategy. What I would have loved...
Forex Pipper has asked, do you think that they're trying to bring all currencies to parity, all of them, and line them all up in there?
I don't know if it's possible. It is very possible to bring them all together, all as one. It is very I mean, we're close anyway. Think about it. Look at all your currencies. We're not far away. It's very possible. What I want to do is, and what I'm going to do is, I'm going to look into all of these. I'm going to look much more deeply into this thing. It's only recently that I read these papers and other papers and the natural economic order, and as well, I didn't realize until the other day that this thing's been going on with the ECB until early 2014. So I'm slowly putting all of this together. If they connect their economies to some kind of a price, maybe they all connect together based on purchasing power parities. This is what Gazelle recommends. Why? Because it stabilizes all prices throughout the world, and it brings everything together in that stabilization. So can they all go to the parities? It's very, very possible. It's very possible. You look at your purchasing power parities. They are possibly trying to bring it all together. Depends. how are they
Okay,
going to value the interest rates? That's the whole question. Are you going to value these interest rates based on the money supply, as has been done since 1971? Or are you going to value the interest rates based on a price? You know, that's the way to know that is, again, to go to your central banks, follow those M1 money supplies. That will give you the answer to exactly what these guys are doing. And you know, and again, I have to mention, this is early for me, you know.
Right. Right. Yeah, it sounds like you're gonna have to come up with a new model because of what they're doing.
That's that is the whole part that bothers me to no end. Here's the thing. I mentioned Martin Armstrong. I love Martin Armstrong, okay? He's a great and brilliant guy. And I already had an interest rate model put together, but I didn't totally understand it. I didn't totally understand it in terms of how do I put it into use. When Martin Armstrong, when he let go of that one sentence, when he said the exchange rate is inflated by the interest rate, I said, oh my gosh. So I went back, I looked at that model, I put it together. I mean, and it took me months upon months upon months to perfect it. You look at those 300 trades on my blog, that is the model, okay? That's the model. And it's the model for, I don't care what currency it is. It's every I can do it for any currency. I perfected it to the point that all I got to do is enter a number, bang, it's done. And I know exactly what to do immediately. It allows me to make a trade decision in a second. Now, what they're doing to me is, now I got to revamp. I don't know what the system is going to perfectly look like. I've been playing with various numbers. I know that they're going to.
What do you do in an environment like this? Do you stop trading and stop putting out trade recommendations?
No, we keep this up. We got till July. Right now we're good till July, you know. Okay. And then we'll see in May and June exactly, you know, if there's what's going on. You know, we're going to see how they're going to price these things. That's the most that's mostly important. How are you going to price your currencies? What's on your mind? And believe me, I am on the game of these guys. You know, I like to say that Mario Draghi, he called me yesterday. He's asking for the rent money because I live in his head, you know. I mean, I'm making a joke. I know it's not funny, but what I'm trying to say is I am inside these central banks. I know what they're doing.
So then let me ask you this for a wrap-up, and people are requesting your blog site, how they get to your blog, and Brian's Twitter handle is at author B Twomey. And so tell me what you see. I'm going to ask you for a Nostra Twomey. Euro 97 or Euro 120?
No. Lower first. Lower.
Okay.
Fed funds. Yeah, Fed funds rates between 0.12 and 1.31. I know that's a big range, but that's where we're at right now. The 2-year yield between 0.53 and 1.44. Watch that close. Watch that 2-year yield. It's got a range. It has ability to fly up and down. It is the 10-year yield that does not. The 10-year yield, I'll show it to you guys. I'll show this. I don't know if you could see it, but
okay. We also got a question. Why July? Why July?
That's where that's what the date the ECB and the bankers associations, that's where they came up with it. I don't know where I don't know. I mean it's their date. You want to watch very closely Australia and New Zealand in this whole scenario. They're the ones that are going to lose out, and their currencies. I don't know. You know, I haven't had time to delve into those two, but I can tell you right now that those two currencies have problems. Here, look at what I wrote here. Here, Australia, New Zealand. I wrote whacked. Okay, they're having problems right now. Let me go back. The 2-year yield I mentioned, 0.53 to 1.44. Here's the thing, the 10-year yield. Your resistance points above, 2.02, 2.21, 2.23, 2.27, 2.51, 3.03. What are you saying? That 10-year yield right now is at what? 1.7, 1.8 in that area, right? What you're saying, what would... Let Yellen raise again, or let something happen to rise this 2-year yield. Guess what we're going to have on our hands very soon? A flat yield curve. Flat, dead flat. That's a problem. Watch the spreads. Watch your 10 and 2 spreads, okay? That's what's moving some of these currencies. Your 10 and 2 spreads. The S&Ps above 1999.33. 2041.62. Oh, watch this. 1889.95. Watch 199.33. I mentioned that already. Euro versus the Dixie. What's happening here? They're flattening. You see, here's your euro right here. If you can see this, it's at -50 versus the DXY at a positive 153. What does that mean? I don't know if you could see. Your regression line looks like this, where the dollar is, I don't know what these pictures are, I'm on the screen. The dollar is high, the euro is low, and what's happening is that the euro is coming higher, the dollar is coming down, okay? The curve has, what I'm trying to say is the dollar curve has steepened against the euro USD. Inflation. Oh, look at my thing. I ran inflation in all the different periods. 1971 to 1921 to 71. 71 to present day. Guess what we got? 0. There hasn't been inflation in the United States in 100 years. What else do I got? I have interest rate forecasts. I put those on investing.com. I have Ionia, I have Sonia, and I have Fed funds. Guess what? No one's reading them, okay? No one. What does that say? Tons. 3 people read Ionia. 7 people read Sonia. Less read Fed funds. What does that say? Ooh, boy, does that speak volumes out here. Unbelievable. If you got, if you understand what I just said, go to the pre-2000 Bank of International Settlements triennial surveys and look at look at how they traded in the 90s. They traded everything by interest rates in the 1990s. When they introduced the euro, everything changed. Why? I don't know. I don't know. And now we're into this intermarket analysis and all these other things, that you don't have to do that. The currency market is a self-contained market. It tells you everything. All these pairs transmit messages, big giant messages. Look at the relationship between CAD, ZAR, and the euro, okay? To give you an idea of exactly what's happening, where we stand in our currency markets. Euro yen has to stay below. Euro yen has to stay below 132.24, 131.81. What else? CAD ZAR, one of the most important currency pairs out there to give you an idea of risk off, risk on. Gives you an idea of where the euro sits. Gives you an idea where the dollar sits in this dollar-euro relationship. Watch your silver currency ratios. Right now it is extraordinarily high. It is at 78.42 current. Your top is at 80.07. The last time 93, to give you an idea of what this top means, last time 93 was seen was March 1991. Before that, January 1941, it hit 97.31. Your silver currency ratios are extraordinarily important. They are great indicators to trade your currencies and trade all of your markets if you get into it.
Wow, boy, did you cover a lot of ground.
Yeah, I knew when you said I didn't have much time. I got all this stuff prepared, I realized, Dale, I know that, nothing is ever worked out in advance when guys come on these shows, okay? And I don't care who these people are you got, from the big top guys to the nobody guys and everyone in between, you know. So what I do, and I don't come on, I'm not out very often, but so I prepare for everything and anything, you know. There's no such thing as I don't know. That will never happen with me, because I do know, because I'm ahead.
So what do I do with, Brian, what do I do with my, you know, let's just say an average guy has a $10,000 account right now. How would you advise them to be positioned? And let's wrap it up with this into the July. Maybe you could look out to July and what you think is going to happen into this change, how people could capitalize on what you see coming.
Short euro. Euro stays in more contained ranges. I still love the short euros, and I think it's still going to go down. If euro breaks 16, then it's a problem. I don't see that happening. I like the short euros. Watch gold, extraordinarily close. Gold is now at 1183. The next above you want to watch very, very close is 1207. Below you got 1149, 1134, 1117. Watch gold close. That's going to determine and tell you what's going to be for the future. I still like the long dollars. I like the long S&Ps. Okay, long S&Ps, long United States dollars, short euros, short British pounds. Australia, range, until the world figures it out. Australia's going to be range. Probably the same thing with New Zealand. What else?
Great interview, buddy.
Thank you.
You always come through. You never disappoint. And you know, I'm getting. Normally, I don't get as many comments, but people are saying I need to rewatch the interview. Too much insightful info to get it all at once. Numbers said it was an electric interview. So, like a electric Ladyland, you're like the Jimi Hendrix of FX trading. All along the watchtower, buddy. Thanks for being a watchman.
I see all the guys. I see it all. Hey, guys, in the law, thank you, everybody. Thank you, Brother Dale, always for having me. I hope everybody learned. I hope everybody profits. I hope everybody looks into all the information we talked about today. Any questions, anytime, just write me. Go to the site, b2me.com. Write me anytime. I don't care.
Okay, so that's your blog, b2me.com.
Yeah, that's the book site, and then you go to twbrian.wordpress.com, and then the Twitter thing at author B2me.
Okay, so I've been calling you Twomey for 2.5 years, and it's Toomey.
Yeah, that don't matter.
So all right, you know, what do I know? I'm from Chicago. So Brian, thanks again, buddy. I hope tips rain down on you, and appreciate it. Let's get back. Late spring, early summer, see how things are proceeding, evolving into this July time frame, okay?
I'm here anytime. And muchas gracias, Mauricio, Adinda, and all the people involved, and thank you, Dale.
All right, my friend. Good hunting, Brian. Okay. That was Brian Twomey, everybody, at author B2Me. Twomey, Twomey. He's a mad scientist, fundamentalist, and it is recorded, so you guys could go back and listen to this again. So our community thanks you, Brian.
I say thank you all very much, very much. Man, I appreciate it.
Have a great day, buddy, my trading warrior brother.
Okay, and, my brother Dale.
We'll talk soon. You can close the hangout at your convenience.
Okay.
All right, take it easy.
How do you close? Leave call?
You just click the page. There you go. All right, everyone. I have to take a quick break. We have another interview coming up. I have to take a break. I have commodity kidneys. You know, I'm 62. I have to take a break. So Dinda, give me 5 minutes and I'll be back for the second interview. Stay tuned. We have Jason Graystone from Empowered Trading. Stick around for Jason in about 10 minutes. Sinatra. Look it up, Alien, look it up on its Twitter handle. Probably listed under his Twitter handle. Sinatra showed this last time. Okay. Look, he's got moving cursor. Thank you, Sinatra. Thank you, Sinatra. Everyone doing all right? And thanks, Sinatra, for that nice post on the pound. Alien, were you able to find his blog link? Stick around for Jason Graystone. Thank you, Lol. There you go. Thank you, Lol. Getting some divergence down here in the end. WTI still looks pretty heavy. Everyone doing okay? Everyone doing all right? Everyone okay? 1204 gold? Yeah. Hmm. Stand by for Jason Graystone. Jason should be with us here shortly. Who's having a good day? Give me a Y. What statements? What statements? Wow. I sure missed this. You know, Peter Goodburn liked it down here. And we had him on and he reasserted, although he didn't like the initial rally out of the hole, but wowie kazowie. Thank you, sir. That's all I could say is wowie kazowie. A lot of gold shares doubled on this move. Which one though? There were so many. Brave new world we're entering. Stick around for Jason Graystone. I believe he's with Empowered FX. Stick around for Jason. Oh, all of them. Should be with us shortly. Everyone doing okay? Stand by. 300 lower in the Dow. Hello, Cox. How are you? What is this? Looks like a 3 driver to me. What's the instrument? Eurozar. Looks like a 3 drive to a top formation to me. I don't think I'd buy it. Oh yeah, nice divergence. Someone else using 3 drive techniques in here. Thank you, Cox. I know Tico's a big believer in them. Tico's back tested them. 3 drive tops. Good eye. I think I did take a quick look. They were looking for a recovery here. You're buying it here and looking for a recovery in the guppy, maybe back to 69. Is that correct? Is that correct, Rick? Yes? Thank you, buddy. Okay, you are. Sell this rally. Okay, so we reached objectives. Maybe back to 69 or 70. Thank you, Rick. Everyone thank Ricardo. Trading the guppy counter trend here. Thank you, Rick. Everyone thank Ricardo Picasso for his guppy view. So Dinda, was a link sent to Jason? Okay. Waiting for Jason Graystone. Brian's blog. Thank you, Alien. Trade Empowered. Waiting for Jason to show up. Jason here yet? Let's just make sure you have the right email. This is his correct. This is his email address. Did it go there? Did it go there? Everyone doing all right? Giuseppe says 1490. 1490 from Fibstalker. $114. Okay. Is Jason plugged in here? Okay. Jason, please keep the volume down on the room. Can you hear me, Jason? We emailed the link for you to come into the Hangout. Check your email. Yes. Okay. Okay, Jason's going to be with us in a minute. Stand by. That's okay. That's show business. Do we have a broadcast after this, Adinda? Just so I know how much time I have. I'm looking at the IM and the Hangout. Here's Jason. Hi, Jason.
Hello.
Very nice to meet you, Jace.
Yeah, likewise. Sorry about the delay. I was hanging around on looking at myself on the screen thinking, what's going to happen? I thought it was like Skype.
Reminds me of Michael Jackson's song, "The Man in the Mirror." We all have to we all have to look at ourselves in the mirror sometimes, Jason, don't we? Tell me this.
Yep.
What did you see in the mirror? I'm going to put you in a time machine and take you back 5 years to when you began to trade and you're taking courses and you're trying to find your way in the industry. Tell us about what that was like for you and what you saw in the mirror.
What I saw in the mirror was someone who was a bit cocky, thought he could do anything, bit of an ego, really got into trading for the get-rich quick, as many people do. I had to really look in the mirror. In fact, that's when I changed around and turned around my trading. But yeah, I had a few quid, I had a few pounds, and really I thought, how hard can it be? I can do this. I can run a business. I can do anything. So
we're look, Jason, I've had my teeth kicked in a few times. And in fact, I used to follow people only for the reason to fade them and take the other side of the trade. So that's why I had an interest in what others were doing. Now I have found that through collaboration and with people that are even better than me, that I've risen to the level of their expertise. So you went through the typical normal cycle of thinking, oh yeah, I could tell it's going up, I could tell it's going down, and went through some emotional duress during the process. What was your epiphany that I read in your bio that about 16 months, maybe 18 months you wrote before you started to become proficient and finally knew that you knew? What was the epiphany?
The epiphany was, really it was for me, I'd taken a few courses, a few trading courses, and really I was being driven by the get rich quick. I was being driven by trading money in the first instance, and everyone's got this real desire to gamble their money straight away because there's a lot of people telling you that it's easy. You just put a few pounds into the game and you can generate massive returns. And when someone's telling you that, and then someone else is telling you that, well, we'll tell you how to trade properly, but it's not easy. You're going to have to put in hundreds of hours of back testing. You're going to have to earn discretion in the markets. Well, naturally you're going to go towards the people that are telling you that it's easy, right? So, the epiphany came when I saw just how much free content and training that my mentor had put on the website. Time's very valuable for everyone. So when I saw how much free training they'd put on there, I thought, these guys actually do care. So I took the plunge one last time, and it really reset my mind. I didn't think about the money. I thought about learning the skill. It was like when I learned guitar. I learned guitar. I spent 10 years perfecting the guitar. I'm still not perfect, but that was for free. I wasn't ever going to earn money out of it. So I sort of just changed my mindset, and the course that I took really concentrated on resetting the way you're thinking about going into trading. It was very clever. I'm very big on psychology and how it changed my trading and turn my trading around. So that was it, really. That was the epiphany. It was not concentrating on the end result. It was just step by step gaining that discretion in the market and resetting my thought process.
So trade markets, not money.
Yeah,
The money
yeah.
is right. See what the market has to offer to you instead of saying, "Well, I'm going to risk 1%," which really isn't a market stop; it's a money stop. It's risk management, right? So a lot of people do it. They go, "Well, I'm up 300 today," but that's fine, but your target's another 80 pips away. So people, when they start thinking, "Wow, I could use that $300," they take it, and then they're not there for their target. I can only see that because I still did that.
Yeah, that's another psychological demon. Psychological demons, they're everywhere, and to overcome them is one of the hardest challenges we face. But when you've done all the back testing and you can really anticipate the story that you're in, you know what's likely to happen or what's probably going to happen based on your sample size, your historic data, it really allows you to psychologically sit through the losses. And it's difficult to sit through losses, but it really sort of stops you taking targets early, stops you moving stops, and all that bad stuff that I used to do when I was stumbling along trying to break even.
Well, let me take a guess, and I see if the memory of a 62-year-old guy is pretty good. I've interviewed Akil Stokes before, and Trade Empowered is, I believe, Jason Stapleton.
Yep.
Okay, and I interviewed Jason once, and so you're the third person from this company. Did you gravitate towards harmonics? And because that's one of the that's what Mr. Stapleton is very well known for, are his harmonic patterns. So
yeah,
did that turn you around?
Yes, definitely. I didn't even appreciate structure. I didn't appreciate harmonics, and really, I didn't even know what backtesting was until I met Jason. Well, not met him, but I started working with Jason and Akil Stokes. That's when I started to get serious and understand the importance of structure in the markets, harmonic moves. These levels are respected, psychological even-handle numbers, and really, it allowed me to see the markets in a different way. And once Jason Stapleton, you obviously know of him. He's no fool. He's no one's fool. He's very honest, very ethical, and the same goes for Akil. When I could demonstrate to them that I was consistently profitable, and there was a gap for a London session live room, well then I stepped up, demonstrated my abilities, and then we partnered up, and now we run the UK live trading room, where it's very similar to Akil's, where you get, and yours as well. You run a live room and you get to come in and just watch me trade for 3 hours every day.
Well, it's a little different. When I moderated a trading room where people were paying subscription fees, it was more all about me, and people would stand up and sit down when I did, and what we do here is much more collaborative. I don't claim to be the greatest trader or a trader who walks on water. Consider myself good, but I've actually become better because we've attracted some very good traders who share their ideas every day. I think it's more of a mastermind than the standard setup where whoever's moderating is the trader, and people will come there to follow that trader. In fact, the lazy people never even want to learn the whys or the hows. No. They just want the euro up or down, pound up or down.
Yeah,
buy, sell,
where
buy,
should I buy?
sell.
Where should I sell? Yeah.
So they say a picture speaks 1,000 words. So here in Hangout, you can share your desktop so we could see some of the things technically that you're looking at. You go to the upper left-hand corner. There's a white arrow and a green box.
Yep.
And you click that because there's been some pretty good action. We shook out a lot of bears in the euro last week, taking out stops over 109.60, 110.80. You know, a lot of people are saying maybe there's a shift in dollar trend going on. I'd be curious to see what some of your views are on a few different instruments and how you're coming to that conclusion. And we could start, we cover everything in here, so wherever you want to start to give us a view, waiting for something to come up. So after you click that, then you click the desktop you want to show, and then click Start.
Yeah, sure. Okay. So can you see my screen now?
No, I just have a blank screen. So you click the screen share, and then there'll be different boxes that come up with different screens, and you click on that box, and then Start, and something should come up.
Okay. Screen share. It's actually sharing my screen, but it says I'm the only one here. That's interesting. Bear with me.
It's okay.
Huh.
Used to be a little easier with Skype, but you click that box. I'll do it. So I click the box.
Got it.
You got it? Okay, so still nothing coming up. There we go. I think something about to.
Okay.
All right. Okay, so we're looking at the pound here.
Yeah, I was looking at the pound. If you want to look at the dollar,
That's fine. That's fine.
Yeah.
You know, it's what you have conviction about, or what you're looking at, and what's important to you in the market structure of the pound. We have that nice pop from the 141 level.
Yeah.
I think we achieved almost a 50% retrace of the recent decline.
Yeah.
What's your view from here? Is there another drive left to the upside? How are you approaching the pound today?
Yeah, I am expecting a retest of this level at 14600s. We were bearish. We came down, and we're at the lowest point since sort of 2009. We did find support, and then market consolidated. We broke out to the upside, and I said to the guys in the room, you know, we'll look to get long. You know, we had new structure highs, and we was bullish. But then as we came up to test this previous support level here, this is what I was paying attention to.
Interesting.
And just like a wall, you know, the market smashed into it, and we saw a retracement. There was some counter trend trading taking place there, and we made some money off of that. But I'm expecting a retest of that level. Essentially looking at it.
Up back towards 46. I want to ask you, what are your boxes there? You have green boxes, you have pink or fuchsia boxes. Yeah. Are they your pivot zones? What are they?
They are essentially dynamic support and resistance levels. So
what makes them dynamic?
They're dynamic because they're based on the time frame that you're looking at. So you can set them to, if you're on the 4-hour chart, you set them to a daily time frame, and they'll give you the major support and resistance levels. And then typically, if I go down to the hourly, I'll set them to 4 hours, and they'll give you a support and resistance level on the higher time frame that you're looking at. So
okay, is that part of
pay attention to?
Part of a software package offered to people that use your service?
Yeah, we develop these at Trade Empowered,
okay.
And they're just indicator. They work with Ninja and MT4 and things like that.
Okay.
Okay, so right. What I was looking at is the best place to get long, and really, I am interested at the level we're at now, the 4400 level. We came down. We came down. We've come down into this level here, and you know I'm big. As I mentioned, I'm big on psychology in the markets and harmonic moves, and you can see that we're coming down to an ABCD harmonic move at this level. Now this 143.50 level, you know, price action respect to this level.
This harmonic that you're showing us with the blue line is kind of like almost like an Elliott pattern, ABC, equality with both waves.
Yeah, it's just it's not Elliott wave because it's Elliott wave. I don't trade off Elliott waves, but there's
Right.
certain filters that I use.
But even in harmonics, you look for equality. You also look for fib extensions of equality.
Of course.
And okay, so what tells you
Yeah.
this area is important?
Just a number of filters, really. In my trading, I have lots and lots of filters that I pay attention to when I'm looking to place a trend continuation trade. And really, I pay attention to everything from candlestick formations to, looking left, structure looking left. This wedge pattern here, you can see broke out. And then as we come down, then we should find some support at this level. And then obviously the psychological numbers as well. Well, you can just look left, you draw a line in, and you can see how this 1450 level is respected. You see we're putting in these low test candle wick bars here. So, I think this would be, it lines up with a Fibonacci extension. We've got Fibonacci inversion in that area as well. I think my tools don't work sometimes.
So you're looking for a recovery but a lower high.
I'm looking to get long in this area here.
Right, and looking and target wise, you're looking for a lower high than we posted last week.
Target wise, I would be looking for a retest of this structure for target ones, and then I'd trail stops to target twos up to the recent high. I don't shoot for extended targets. I'm a trend continuation trader, but not a trend following trader, so I don't shoot for extensions. I just trade for a retest of structure in the direction of where I predict the market's going to go.
Okay, so does the pound structure differ from the euro structure, that the euro is pulling back as well, but it has the potential to take out the highs from last week, while the pound looks like maybe all we'll get is a retest?
Yeah, I think they do move very similar, but the euro is obviously I think we could see a breakout because of this. We saw this last week. We saw this very similar wedge pattern breakout, but we haven't come down to sort of violate this. We haven't come down to test this structure looking left. I think this could break out to the upside. I think we can expect a higher high on the euro dollar.
Okay, you have any fib extensions that would give us an idea of? I'm figuring 13.5 or so. I have a back test of a trend line break right around 113.5. I'm curious as to what your extension moves might take us to.
My extension moves, they'd be based off of structure as well. So I mean, really, looking left, I mean, there's nothing looking left until we get up to sort of this level here. So yeah, 13.
So and that's what kind of harmonic? Is that a butterfly?
This would be a bat pattern. This big purple. That's a bat pattern there. That purple indicator.
There's a movie coming out. There's a movie coming out where Superman, I think, takes out Batman. Will that eliminate? Will that eliminate a bat pattern from harmonic work?
Well, I'm trying to develop the Ant-Man pattern at the moment. I do trade some advanced patterns, not all of them. I don't trade butterflies. I don't trade Gartley patterns with an inverse risk reward. I only trade patterns with at least a 1-to-1 risk reward, apart from the cipher patterns. So.
And okay, so what are those patterns that have at least 1-to-1? Cipher is one?
Cipher doesn't actually. Cipher is the only pattern with an inverse risk reward. Typically, you get an inverse risk reward on a cipher pattern. The only reason I trade cipher patterns regardless is because my back testing shows that it's the most profitable pattern that I trade. So I don't mind it being an inverse risk reward because I know that it's going to be profitable over time.
Interesting.
But other than that, they're all a minimum sort of 1-to-1 risk reward.
Okay, so ciphers, you look forward to seeing those set up.
I mean, I don't get excited by trading. I don't particularly find it fun or exciting. I just know that if I see a cipher, I have to get involved.
Well, it sounds like you've come a long way. I talk about this, not magnifying the importance of the outcome on every trade being life or death, or you'll make yourself sick. And every trade is just another trade.
Exactly. As long as you're taking the trades that meet your rules, then it's one good trade, one good trade. So that's what I try and do. We never know where the market's going to go, but it's good to be ahead of the market and do your analysis. I do my analysis 3 times a day now because I run the live room. So I do it once at night, once in the morning, and once during the live room. That's really propelled my discretion in the markets because I'm looking at the charts so much now. That's allowed me to become a better trader as well. But if market does push up here, we've got a cipher pattern waiting up here as well. So
what instrument is that? That's a pound.
So sorry, Dale.
That's the pound you're on right now.
That's the cable, yeah, pound dollar.
Yeah. Okay. So let me ask you this. I used to be this way. I would do cartwheels after winners and fetal position after losers. Were you like that at the beginning?
Yeah, I mean, I was trading a system that I hadn't developed. It was a plan that was put together by someone else. I was just clicking buy, clicking sell, and really I didn't know the story I was in. So I would be in a trade, I would feel terrible when I lost. I'd come home and not speak to my family, and then when I won, I felt like a god, and I felt I typically wouldn't even let the targets get hit. I'd move my targets and take targets early, take profits early, and I'd have this constant battle in my head, like, oh look, it's moving towards your target. You should take the profits, and then the other side of my head would be going, yeah, but if we let it run, we'll get more profit out of it. This could be the big one, and I'd have this constant battle in my head every day, and it was destroying me. I'd come home.
I still have to fight that. You've overcome it completely, haven't you?
I wouldn't say I've overcome it completely, but I do work a lot on psychology now. Now I can look back and see how simple trading is. Not easy, but it's quite simple. Really, it's not the system or the strategy as such. It's the actual trader having the discipline to consistently trade the same thing every day. And once you can see how simple the actual trading is, you can put more concentration on the psychology. And I really do a lot of work on the psychology side.
Could I see that Euro chart again for your upside target? This is for publishing, so I get some of the numbers right. Possible upside in Euro off your extensions.
Yeah.
I think you had like a 114 something on some harmonic came in there, 1360. 13.
Yeah, this level here. I mean, we've got a 1618 up here, and if we go out to the higher time frame, you're going to see that it lines up with this. Let me just bring that down. Sorry, Dal, I don't have enough days lined up here, but
yeah, that's what you had.
That's it there. So that structure level looking left there, that's where I'd be expecting market to go to next.
Okay. So you say you focus a lot on psychology. Why don't you give us a couple of your pearls? Because, I agree with you. They say real estate is location, 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 and I agree. Trading is psychology, psychology, psychology. So how about some words of wisdom as to have the correct psychology while you have real money at risk?
Yeah, I would say, I would say before you start, we have a lot of people come and say, when should I start trading live money? Or that they're driven by that from day one. And really, I tell a lot of the people that I work with that you should not consider trading live capital until you can imagine yourself going to an investor, and the investor says, okay, here's £1 million, show me what you've got. And you can confidently bring up some paper and say, yep, this is my results. I know your probable expectancy. I know your return on investment is likely to be this. Until that point, until you can prove that to yourself and a potential investor, then, don't worry about trading live money. Go through the process of back testing a strategy, do the same thing, analyze the charts day in, day out the same way, and then you'll know the story that you're in. And if you know the story you're in, you're anticipating the trade as you're in it. You know what's probably going to happen next. So if it's a loss, it gives you that psychological mindset to sit through that loss. Until that point, you are just going to stumble across, system after system, searching for the next shiny object or the next strategy. And really, it's not the strategy that matters. It's all down to the trader trading a consistent plan with discipline. So that's all I've got. That's all I've got on that, really.
Okay, well, I agree, but I've come to believe that people do not take demo trading seriously, and there's no actual emotion tied into trading because there's no money on the line. So, they call me coach here in Lara at times, not because I'm a master trader, but because I've been doing this for decades and have seen thousands of people trade. What do you think of it being a compromise, even if a guy is wealthy and can risk 100K in the market, for them to trade micro lots?
I was just about to say.
Were you going to go there? Yeah, because that's kind of a compromise. At least you have a little flesh in the game.
Yeah, if you do need to feel the pain of losing money or the excitement in the first instance of winning money, then trade micro lots. So you're only gambling a couple of cents or a couple of pennies. It's real money, but set yourself a goal of sort of £10 or $10, and just work towards that, and that will give you, that will make you stick with it for a bit longer, because lots of people just give up because they find that it's too much work, they're not earning any money, so I would say exactly what you just said: trade micro lots.
Well, you don't lose till you quit. That's my philosophy. So, Jason, I want to thank you for joining us. I know your Twitter handle is @J_Graystone. What's the best way for people to stay in touch with you, follow your work, get involved with you? If you want to show your website now, that's fine as well.
The best way to get in touch with me is on Twitter. Twitter's great. We've got a great community on Twitter. But if you go to tradeempowered.co.uk, that's the UK website. And you'll find all of my contact details on there for YouTube, TradingView, and all the rest of it. So I can, I don't know how to stop screen sharing.
And, I love your wood beam ceilings. Do you trade out of the UK?
I trade here in this room. This is we just bought this house, and it's a really old house, and it's got this great office studio, so it's perfect. Really
cool. So when I had a beach house, I had all that wood up on the ceiling. So I want to congratulate you on your evolving into a great trader and passing on your knowledge as a moderator leader in a room. And I'm so glad I reached out to you. Say hello to Akil. I will. And the boss. And I hope that you and all your associates, that pips rain down on you.